Money can make you rich, but knowledge keeps you rich. More than 70 years ago, a quiet, disciplined economist named Benjamin Graham wrote a book that would later be called The Greatest Investment Guide Ever Written. Not because it teaches you how to get rich fast, but because it teaches you how to never be poor again. Today, we explore The Intelligent Investor, not as a textbook, but as a set of timeless rules anyone can use to build real, lasting wealth. Graham begins with a simple but powerful idea. There are two kinds of people in the market: investors and speculators. A speculator chases quick wins. They follow hype, news, rumors, and emotions. Their decisions are reactions. But an intelligent investor does the opposite. They focus on value, not noise. They buy companies, not tickers. And they think in decades, not days. Graham's message is clear. If you want lasting wealth, stop gambling, start investing. Next comes one of the most famous ideas in financial history, Mr. Market. Imagine the stock market as a man who knocks on your door every day. Some days he's excited, prices are high. Some days he's depressed, prices crash. But here's the key: his emotions should never influence your decisions. You don't need to follow him. You only buy from him when the price makes sense. You ignore him when he's irrational. This teaches us one of Graham's core lessons. Your worst enemy in investing is your own. Most people ask, how much does the stock cost? An intelligent investor asks, what is the stock worth? Price is what you pay. Value is what you get. These two are not always the same. The market often misprices companies because of fear, greed, and speculation. This creates opportunity. Graham's strategy is simple. Buy when value is higher than price. Hold until the value is recognized. This is the foundation of value investing, the strategy that made Warren Buffett one of the richest men alive. If this book had only one lesson, it would be this: margin of safety. It means never invest at the edge. Always leave room for error. If a company is worth $100, you don't buy it at $100. You buy it at $70, $60, $50. Why? Because the future is uncertain. Even the best analysis can be wrong. A margin of safety protects you from the unpredictable. This single idea, buying with a cushion, is the safest path to long-term wealth. Graham says there are two types of intelligent investors. One, the defensive investor, values safety, prefers simple, stable investments, focuses on long-term consistency, uses index funds, bonds, and large proven companies. Two, the enterprising investor, willing to do more research, hunts for undervalued companies, buys when others are fearful, looks for hidden opportunities in the market. Both can succeed as long as they use discipline. It's not about being aggressive. It's about being consistent. People love predictions. Market will crash. Market will explode. Buy this, sell that. Graham says, don't trust anyone who claims to know the future. No expert, analyst, economist, or influencer can predict markets with certainty. The intelligent investor doesn't try to guess the future. He prepares for it. Markets don't destroy wealth. People destroy wealth through panic selling, FOMO buying, chasing hype, following crowds, emotional decisions. Fear and greed are your biggest enemies. Graham's advice is simple. Be patient when others are impatient. Be calm when others panic. This is how intelligent investors win. Graham also teaches, don't put all your eggs in one basket. Spread your investments across different industries, different companies, different asset types. Why? Because no matter how confident you are, you can always be wrong. Diversification protects you from being wrong at the worst possible moment. Success in investing has little to do with IQ. The real superpower is emotional control. An intelligent investor avoids noise, respects risk, understands value, thinks long-term, ignores hype, buys with a margin of safety, doesn't try to be perfect, lets compounding do the heavy lifting. Wealth is not about brilliance. It's about behavior. Benjamin Graham didn't teach people how to get rich quickly. He taught them how to get rich slowly, safely, and intelligently. The Intelligent Investor is not a book about money. It's a book about discipline. If you master your emotions, understand value, and follow the principles of patience and protection, then you're already ahead of 90% of the market. Thanks for watching Wealth Insight TV. Subscribe for more timeless lessons on money, investing, and financial freedom.